welcome back. You're watching The Money Show on ET Now. The Flexi Cap Fund category has definitely been a very interesting one. The category was created just about last year, in fact, just around a year ago. And since then, we've seen a lot of mutual fund houses launch schemes in this category. And it's a very exciting one too, which gives the fund manager freedom to pick and choose from across market capitalization. So you could call it market cap agnostic. Now, from all the funds, there is one fund that's really managing to crack out some very smart gains. So if we just look at the last 1 year, this particular fund has managed to exceed even the average returns from this category by almost 30 percentage points. I'm talking excuse me, about the PGIM India Flexi Cap Fund. So it gives me great pleasure to introduce on the show now Aniruddha Naha, the Senior Fund Manager for Equities with PGIM India Mutual Fund. Aniruddha, thanks so much for joining us today on ET Now. You know, before I start talking about your fund performance, etc., why don't you start off by introducing the fund a little bit? What's the investment strategy like? How do you go about picking stocks across the different market caps?
Sure. Thank you, Mubina. Thank you for having me over here. I hope all your audience and you are doing well at your end. So the FlexiCap, as you clearly mentioned, is a fund where we can invest across market capitalization, and that gives the fund manager the leeway to go ahead and build a portfolio of probably whatever the style is. We go ahead and build it with about 40 to 50 stocks in the portfolio. The idea is to try and pick the best available ideas in the market across market capitalization. So we are agnostic to the benchmark to that extent. We are aware what the benchmark is, but we are pretty agnostic there. The idea, what we do is, it is a complete bottom-up process of building the portfolio for the mid-cap and the small-cap segment. Whereas on the large cap segment, we do study the macros, the sectors, where are the profit pools, etc., and go ahead and build certain amount of positioning in the portfolio for the large cap, where we take a top-down view. But otherwise, for the mid cap and the small cap segment, our idea is to do complete bottom-up research, look at ideas specifically, then work across sectors, and then see what is a good idea to look at. The investment philosophy, frankly speaking, when we are building this portfolio, clearly three things that we look at. The first perspective is to try and reduce risk as far as possible. How we go ahead and do that, we focus on operating cash flows in the history of a business. The company must have positive operating cash flows in 70% of the history of the business. The second thing that we take care of is that the company must have a clean balance sheet. We don't like businesses where there is too much of debt. Now, these two things put together, along with the fact that we look for businesses which have clean corporate governance history, is what our first point of recourse is. Once the companies fulfill this, then we start looking at what are the growth prospects, and we usually take a 3 years perspective while building in a position. So it's a fund where you have a single point fund where you can get a exposure to large caps, mid caps, and small caps. The last 3 years, we've been running this fund with almost 45 to 50% large caps, and the rest of it has been mid and small caps.
Okay. So Aniruddha, essentially, you don't necessarily take a market cap view. You pick your stocks since you really don't have any restrictions on market capping. You focus more on stock picking rather than, okay, how much of the fund is in large caps, how much of the fund is in mid caps. Is that right?
Pretty much that, but we do keep something at the back of our mind, because we have investors here who probably wouldn't want to take too much of a mid cap, small cap exposure also. So what we ideally do is we keep the large cap position at a bare minimum of 45% or above. The rest of it goes to mid and small caps. So at the point where things are really positive and the outlook is very positive, we will have probably about 45% large caps. The rest will be mid and small caps. On the pessimistic side, probably when things aren't great and you need some amount of safety, we might go up to 55 to 60% in the large caps, but we will still have about 35 to 40% mid and small caps.
All right, understood. Fair enough. And you have to cater to all the investors that are out there. I'm going to ask you a bit more of a broader question, just pulling out a little bit, speaking only from your fund perspective. We've seen a lot of investors putting money in this category. The last couple of months, the AMFI data has suggested that there's continuous net inflows into the flexi cap fund category. What do you think is pulling investors towards this fund category? What are the pros of this category?
See, I think this is one single fund which can address the requirement for an investor, looking at a large cap, a mid cap, and a small cap. Instead of having three funds, if there is a true to sense flexi cap, which actually mitigates the risks also, and probably migrates to a segment of the market which has the potential to deliver, then the investor doesn't need to actually break up his investment or allocate his assets between three set of funds. He can actually give it to the fund manager and let him decide as to whether the fund money needs to go to the large cap, the mid cap, or the small cap segment. As a retail investor, I think that is the best thing to do, where you have money in one single fund taken care by the fund manager, and he doesn't need to actually take the asset allocation call between a large cap, mid cap, and a small cap. Other than that, I think the historic 1-2 couple of years returns are also probably driven some amount of money to the flexi cap segment.
Now, yours has been among the best performing, funds, Aniruddha, which is definitely a mean feat to achieve. I think I was just looking at some of the numbers. You managed to give investors a 76% return. The average return from this category, and this is 1 year, average return is 48%. So many a times, the tendency of investors is when they pick funds is that, okay, and this is the easiest parameter, right? Looking at returns, that, okay, PGIM has done the best, so, let me put it in PGIM India. So give our viewers, your prospective unit holders, a sense of how you see this fund move, because obviously the market will as well change its shape, its direction going forward. If you could give some sort of an outlook to your prospective unit holders on what they can expect going forward.
Sure, thank you. I think this is a very interesting question. Rather than focusing on what has already happened, a new investor coming in would not gain the returns that someone who's already invested in. So what he should look for probably from this segment and the fund, one is we take a little longer term view on certain sectors. We've been early into segments also. To that extent, we've been allocating mid and small cap allocation in the fund for the last 2 to 3 years. And a decent amount of allocation, almost 50% plus of the fund is in the mid and small cap segment. So that is something one can expect that it probably continues unless and until specifically some of the stocks become very expensive. The second thing is our process focuses on building a safety net first. The fact that companies have strong cash flows at the bottom of a cycle, clean balance sheets, and no major corporate governance issues. The fact that we focus on the safety part of it we've seen in the previous 2 years, wherever there has been any major fall, the fund has been pretty defensive in the fall. So the idea is to protect the downside. Today, the returns that have come through over the last 1 or 1.5 years, it's a combination of participating on the upside as well as protecting the downside. And going ahead, one thing we can assure you is we will definitely try and protect the downside first. Try and not erode too much of capital. And if we are able to do that, I think returns should follow. That shouldn't be an issue. All
right. Super. Now, I think you briefly did allude to this bit in your previous answer, but still for the benefit of our viewers. Usually if you say large cap funds, relatively lower risk. Small cap funds, relatively more risk. So for a fund like yours, the Flexi Cap Fund, which really moves across different market caps and you dynamically change your positioning as you feel, how would you define the riskometer? What should be the time horizon investors should have before they consider putting money in the fund?
Sure. Just before coming to the riskometer, I just wanted to highlight something. Today, corporate India, when I look at their balance sheets, the small cap segment has a debt to equity, which is pretty much in line with the large caps. And this is something that we have done for the top 500 small caps. So the risk element which stemmed from the fact that they had too much of debt on their balance sheet is literally at par with where the large caps are. So to give you a sense, small caps could be volatile, but they are not risky. Same would probably be the case with mid caps. So there would be volatility, but I don't think the inherent risk of a business shutting down has come down pretty dramatically in corporate India. Having said that, the fund is a high risk category fund, given the fact that it is an equity fund, 100% equity oriented fund. According to the riskometer, it is the very high risk category that one needs to keep at the back of your mind. And anyone who's looking to invest into the fund should come in with a time perspective of the next 3 to 5 years. And to be very upfront, please don't look at the last 1 year's return and invest into a fund. Our sense is, if you like our process, if you like the thought process, and the fact that we focus on trying to protect the capital initially, I think this fund stands a good ground over the next 3 to 5 years.
Well, that's the entire idea as well behind this segment, Meet Your Fund Manager, to give our unit holders and your unit holders a glance into the thought process, the investment strategy of the fund. So thank you so much, Aniruddha, for joining us to share just that with our viewers. Appreciate you giving us your time.
Thank you, Mumina. Thank you very much for having me.